Hello, Mark Sturdy here with another summary of our work this week, 7 days ahead, looking at major world markets. And if we look at the summary page, you'll see that we once again have no firm view on any of the markets, which is unusual and worth going into a little more detail about. Let's start with the dollar euro, where we often do, and point out that a drama has happened here insofar as what we thought was a generally bullish for the dollar scenario with this triangle and this parallel channel, and the breakdown beneath it has proved to have failed. That the dollar has weakened up through the resistance on this parallel channel, the resistance on the bottom of the triangle, and the the upper diagonal of this parallel channel here. A breakthrough which is a quite dramatic consequence, I think. It does seem to set the tone for a weaker dollar. The weak dollar trend, you might say, started here and was proven there. The question is, from this level, are we immediately going for a weaker dollar from this level? Well, the medium term suggests that the market has broken up through prior highs, and this emergent trend is in good fettle and structurally sound. That the dollar now is prevented from strengthening by the support from 112.75 for the euro, so that the ratchet effect should be in place. And you could argue this is a highly bullish scenario, 1, 2, 3, with good support on this band of prior highs, really 112.75 and slightly below. The very short term, though, is a bit more uncertain, trading between 113 and 116. The market could come back further, and this, you'll see, is a head and shoulders reversal, calling the market up to over 116 minimum. So there's more to go from this pattern here. All in all, it is bullish. A slight question mark over the precise nature and quality of this price action here. We could indeed have it come back further before we went ahead. 112.75 is the support, so you could say very good support just beneath here. Still a buying situation. We are pausing slightly before we are dollar sellers again against the euro. Perhaps we shouldn't be. Perhaps we should be bolder. Just want to see how this worked out, the short-term price action, wanting a bit more of a steer from the very short-term chart before we get involved. Dollar sterling, well, we're bulls of sterling. There's the dollar broadly. There's the rally of the sterling against the dollar. We want to break through 134.34 before we get excited again and selling the dollar against this sterling. Similar with the dollar yen, we want to see a break beneath 140 before we buy the yen, sell the dollar. Sterling euro, the market has, sterling collapsed against the euro, has bounced back. We think there's good evidence of good resistance above the market here at 118, 117.97, 118.28. Possibly a good selling level. Once again, rather like the dollar euro, we'd like a little more short-term signal, perhaps a breakdown through 117.29, this prior high. A breakdown through that would confirm a moment of selling sterling, buying the euro. Stocks, S&P 500, well, the big long-term pattern is bullish. The major support there to prove its bullishness was the 4,800 should stay intact, and it has. The rally back has been fast and furious, but there's good resistance above the market now at 158.64, for example, that horizontal there from this prior low. So there's quite a lot more to prove from there. We're at 58.64 in the shorter term chart. Quite a lot. The S&P has to prove quite a lot more before we can be out and out bullish. Unlike, I should say, the Euro Stoxx, which has bounced beautifully, only has to get through its. Basically, we're looking now for a break up through the prior high 55.24, 55.16 in the short term chart. If we could get that, these markets would look very hot. No question about it. Euro Stoxx 50 and the FTSE 100. The dip down, the rally back. We haven't got the quarterly close above the triangle, but we do have the monthly close above the neckline of this head and shoulders continuation pattern. It all looks very good. Short term, There are some moments for hesitation though. Once again, we want to break up through 89.03, somewhere above the market still here. Are we entering a trading range? Difficult to say. Difficult to buy it very short term, but we like the medium and long term outlook. Same true of the Nikkei 225. Once again, of course, the question mark is this prior high 39,600. Can the market break above that? More medium term, can it break above 49.10 in the weekly chart? All of which suggests for the moment we're in a trading range, hence we aren't taking a strong view. Even though the trend remains intact. These bond markets are bedeviled from the point of view of investors and traders by trading ranges. There's a well-established trading range here, notwithstanding the breakup through the long collapse in yields. We're in this trading range here, very clearly so there. That is true of the Bund. So a big trading range here, and the gilt. Note that the gilt is close to the bottom of this trading range. A breakdown through 438 would be exciting. Oil has sold off. We were bearish of oil. It's come good. We've broken down beneath this. There's probably further to go. But the speed with which it's gone down, come up, gone down again, suggests that 55 is some sort of pivotal level. Unless it can break beneath that, we are square. Gold is in a runaway bull market. The patterns that gave rise to this bull run, the big triangle, the continuation head and shoulders, both of which have been achieved their targets, and now the market superseded them dramatically. It's a rather shapeless, unstructured bull run. It's a rapidly accelerating bull thing, and therefore subject to great volatility and uncertainty. We prefer not to be involved. Thank you very much.